You know the entire AI revolution? Well, it's running headfirst into a wall, a physical wall. And believe it or not, the solution isn't just more powerful chips. It's LITE. Today, we're going to break down Nvidia's massive $2 billion bet on the one company that's using LITE to save AI from its own biggest bottleneck. Okay, let's get right into it. So, I want you to picture a supercomputer that's so incredibly powerful, it's literally cooking itself from the inside out. I'm not kidding. That's the reality for today's AI data centers. See, the problem isn't the chips anymore. It's trying to move these mountains of data between them. The old school copper wires that we've relied on for decades, they're now a huge liability, generating so much heat they're threatening to bring this whole AI thing to a grinding halt. So how is Nvidia trying to solve this massive heat problem? With $2 billion. They've poured all of that cash into one company, Lumentum, to fix this critical choke point and, let's be honest, to secure their own dominance in the AI arms race. This slide just perfectly captures the battle, right? Old versus new. On one side, you have the heat and the waste from copper, and on the other, the cool, clean efficiency of LITE. Lumentum's optical transceivers are a total game changer. They use lasers, it's a field called photonics, to move data at just insane speeds without all that thermal baggage. This isn't just some minor upgrade, it's a fundamental reinvention of how we build AI infrastructure.
But, this isn't just a story about cool technology. It's really a story of corporate survival. For Lumentum to become Nvidia's golden child, it had to escape its own past, a past that was seriously dragging it down. And wow, the numbers here tell a pretty dramatic story.
So this chart, this is really a tale of two companies. That gray line, that's the ghost of Lumentum's past. Its legacy telecom business, which was just in total freefall, pulling the whole company down with it in 2024. But then look at the blue line. That right there is the future. Fueled by AI, their data center business isn't just growing, it is exploding, creating this dramatic V-shaped recovery that has completely rewritten the company's entire story.
But look, a pivot like that, it was not a smooth ride. It was a brutal, incredibly costly journey through what investors called the Valley of Death, that period of intense pressure and uncertainty that, honestly, nearly broke the company.
And this is the crucial point, the sacrifice they had to make. To fund their future, Lumentum basically had to sacrifice their present. They let their profit margins completely collapse, burning through cash at a really alarming rate. But here's the kicker. They refused to cut their nearly $300 million a year R&D budget. It was an absolute bet-the-company move, pouring every single dollar into perfecting this optical tech. And just when things looked their absolute worst, Nvidia's $2 billion lifeline showed up, turning a massive gamble into a strategic masterstroke. Now, this kind of bet-the-company story is exactly what we love to uncover here in the AI supply chain. So if you're finding this deep dive valuable, do us a quick favor and hit that like button. And for sure, subscribe so you don't miss our next analysis. So, Lumentum survived the gamble. But how does this investment protect them and Nvidia moving forward? Well, it creates a powerful, defensible moat around their business. Let's break down exactly how it works. First, it's all about geopolitics. In a world where supply chains are getting more and more fragile, Nvidia's cash is basically building a fortress, a brand new, state-of-the-art photonics factory right here in the US. That means less reliance on Asia and a much more resilient supply chain. This isn't just about making parts. It's about securing the future of American AI infrastructure.
And the second part of this moat is a classic tech strategy. We're talking about ecosystem lock-in. See, Lumentum's hardware isn't some generic component you can just buy off the shelf. No, it's custom-built and deeply woven into NVIDIA's Spectrum-X networking platform. What that means is, to get those crazy advertised speeds from NVIDIA's latest GPUs, you need Lumentum's hardware. It's a powerful one-two punch that keeps competitors out and pretty much ensures that as NVIDIA grows, Lumentum grows right along with it.
And the market has, well, absolutely taken notice. While the broader Nasdaq has been struggling, Lumentum's stock has been on an absolute tear, soaring over 114% year-to-date. This isn't just random hype. It's a crystal clear signal from investors that they see Lumentum as an essential and frankly protected player in this whole AI infrastructure build-out. Okay, so it's an incredible story, but as investors, you and I both know that after a run like that, we have to look at the other side of the coin. The market has priced in absolute perfection, so we need to get serious and analyze the risks and the rivalries. But here's the thing, NVIDIA is playing chess, not checkers. They haven't just backed one horse in this race. By investing another $2 billion into Lumentum's main rival, Coherent, they've pulled off a textbook dual sourcing strategy. Now, this isn't a sign of weakness, it's validation. It protects them from supply chain shocks, and it proves just how unbelievably massive the demand for this technology really is.
But all of this success has also created a brand new set of challenges. The stock's meteoric rise really exposes three critical risks that every investor has to grapple with right now. That lingering drag from its past, a massive concentration with just one customer, and the undeniable pull of what we call valuation gravity.
And that whole issue of customer concentration, that's the most important question on the table. So I want to ask all of you, do you think Lumentum's total reliance on Nvidia is a strategic masterstroke that guarantees years of demand? Or is it a dangerous dependency that puts them totally at the mercy of one customer? Let us know what you think in the comments below.
All right, let's break these down. First, legacy drag. That old telecom business is still a big chunk of their revenue. If it keeps getting worse, it could actually hide the incredible growth from their AI business. Second, customer concentration. Lumentum's fate is now almost completely tied to Nvidia's spending habits. Any slowdown in data center spending from Nvidia and LITE gets hit, and gets hit hard. And finally, valuation gravity. With a PE ratio over 250, perfection is already priced in. Any stumble in execution, any delay at that new US factory, and the stock is going to face a very swift and very brutal correction.
So after weighing this incredible AI pivot against these pretty serious risks, what's the final actionable takeaway for investors? Where do we go from here? Our verdict is this. Hold any existing positions you have and look for opportunities to accumulate on weakness. The AI story is absolutely real. Lumentum is a key and protected player, and that US manufacturing moat is a huge asset. But the current valuation is definitely stretched, and to be blunt, the easy money has already been made.
And this quote really just sums it up perfectly. The transition is real. Lumentum has made it across that valley of death, but at over $800 a share, the market has already rewarded them for it big time. The fear of missing out has pushed the stock to some pretty extreme levels. So the smart play here isn't to chase it. It's to be patient and wait for the inevitable volatility to give you a better entry point. That's our deep dive on Lumentum. If you found this analysis valuable, share it with a fellow investor who needs to see the full picture. And make sure you're subscribed so you don't miss the next part of our Essential AI Infrastructure series. Thanks for watching.